Good morning. Welcome to Stock Market Today. It's Monday, August 31st, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the great content for this show. I'll also give you daily stock ideas to consider. And that hits your inbox every trading day before the market opens. So let's dive right in. Last trading day of the month, S&P 500 and Nasdaq on 5-week winning streaks after finishing higher again last week and on Friday. Dow Jones Industrial Average moved into positive territory for the year. All sectors were higher on the day, with energy, materials, and tech leading the market. Thematically, growth and momentum reasserted their leadership positions as well. Treasuries were mixed, with the curve steepening, and that was a big development last week. Weakness at the long end of the curve, while the front end remains relatively anchored, causing a steepener there. Dollar came under pressure on the major crosses as utter debasement of fiat currency remains the playbook for the central banks. Gold finished up 2.2%. Crude oil finished down 20 basis points on Friday. Outperforming sectors: energy, material, tech. Underperformers: healthcare, utilities, and comm services. Additionally, we have expectations of fiscal stimulus. It's been pushed out, but I think the market is giving Congress the benefit of the doubt. We had treatment and vaccine optimism, as well as positive economic surprise momentum, better earnings sentiment, as well as FOMO remaining as the widely cited drivers of strength in the equity market. And as we get to the desk this morning, more of the same. And remember, it's split day for Tesla and Apple. Futures are up 30 basis points to start the week. U.S. equities on track for a fifth straight month of gains in August. Asian equities were mostly lower overnight. South Korea and Taiwan were under pressure, though Japan was up more than 1%. European markets are seeing good gains. I will note the UK is closed for holiday. Treasuries are bid, with the curve steepening once again. Dollar is outperforming the yen, but is weaker against the euro. Gold is off 20 bips. WTI crude is up 1.1% as, say it with me, inflation. Let's dive into the equity charts here. S&P 500. S&P 500 and Nasdaq are on a 5-week winning streak. We're going to start the week at all-time highs. Now, we do have support down below 3,300 to 3,400. Key support levels 3,250 below that for the S&P. No resistance, as I've been saying for the past few days. Markets trading at all-time highs. So by definition, no price-based resistance. Now, we are overbought in the near term still, and Chaikin money flow is strongly bullish. So we have momentum and money flow confirming the trend. What we would say is we are overbought within the context of a strong uptrend. So what I say that is, you just become more selective with your long ideas. You make sure your risk management process is tight, in place, and followed. It's not a guess. We're not guessing that the market's going to the top. As a matter of fact, we're giving the benefit of the doubt to the trend, but recognizing that within that trend, we're overbought. And should we turn, remember what we've talked about as it relates to sentiment and positioning. Right? Those should be in the back of your mind when you're having that conversation with yourself. When you're sitting down and going through your playbook for the week, you shouldn't be thinking about, oh, well, if the market starts rolling over, oh, well, what's sentiment and what's positioning? You know it already. You've done the work. We're doing the work for you, and you're incorporating that into your playbook, hopefully. So we're just honoring the trend, but being mindful of what's out there. And that continues to be the case today as a new week begins. Let's hit our market in a minute now. What are we writing about in the note today? More new highs for SPY and QQQ, driven by global liquidity. Treasuries under pressure at the long end of the curve. Curve steepener has been the play in Treasuries. You can look up what that means. Dollar debasement remains part of the strategy for central banks. We'll talk about that and why we think that that is going to drive gold's consolidation to likely resolve to the upside. And as I said, futures do point to a higher open here today. Now, if we dig in on the power bars for the major indices, I mean, they are just screamingly bullish. The Dow up 60 basis points yesterday, 13-0 bulls to bears there. S&P 500, 65 basis points to the good, 167 to 49 bulls to bears. Nasdaq up 51 basis points, 36 to 4 bulls to bears there. Small caps outperformed on the day, 681 to 264 bulls to bears. Bonds down. Take energy was your best sector, up 1.84%. And for the first time, we called it out last week as well. For the first time in a while, we have energy with a bullish ratio. So that's kind of interesting to me. As we think about thematically what's going on, we all know the growth and momentum trade, right? By now, you should, if you're just coming to that now, it's you're late to the party. But what I do think is a newer development in the market. We've been talking about it for about 6 to 8 weeks. Is this rising inflation theme? We'll touch on commodities a little bit later. You know how I feel about gold. But what about at the stock level? How does that play out? And you can look at things like CMC, Commercial Metals Company, has a bullish rating here at Chaikin Analytics. It's in the metals and mining space, which is strong. It's a strong industry group. The trend is strong as we are above the rising long-term trend line. CMC has a bullish rating. It's outperforming. It has bullish money flow. It is oversold. And importantly, our overbought, oversold indicator is beginning to move higher within that oversold condition. On top of that, the stock triggered our relative strength buy signal today. So if I'm thinking about ideas beyond the usual suspects where you should already be well positioned long, the fan mag growth momentum tech trade is not new. So largely speaking, you should have your exposures there already if you are a trend follower. This is a newer trend emerging, and it's starting to look like it has legs. So you want to look at a name like CMC as a potentially bullish idea. We're highlighting it in the note today. I'm highlighting it here for you on the show. I think it's a compelling entry. Manage your risk and look for this opportunity out there. Let's look at what's happening at the sector level now. Movement of the last 5 days of trading. Comms, tech at the top of the list. Financials, interesting development as it relates to the financials, as we'll look at later, as yields are beginning to back up. Now the question is, does that have staying power? And if it does have staying power, you have to start saying to yourself, okay, what does that impact in the equity market? And we know it's the banks. We know that they are part of the financials. Materials and industrials are the two cyclical sectors that we like the most, and they continue to trade well and reflect our views. Discretionary staples, REITs, energy, and healthcare are also higher over the past 5 days, but towards the bottom of the list. And utilities are the only group that's trading lower over the past week of trading, which kind of makes sense in light of the big backup in yields we've seen. Now, our industry in focus, biotech services, past 6 months, has been an outperformer, 9.5% to the good relative to the S&P 500. However, power bar ratio is weak, 11 bulls to 41 bears. It's ranked 20 of 21 subsectors. And, biotech's always one of those interesting groups because every stock, especially the smaller names that have drugs in the clinic, right? I'm not talking about the Amgens and the Gileads of the world that have real products that are on the market that you can analyze like you would any other business. But I'm talking the smaller biotechs become interesting because they're somewhat immune to the macro trends that are playing out in the market. So they could be interesting as long as you feel like you're comfortable with the science and the opportunity and what's going on. So, some names that are very bearish, and I kind of caveat our ratings on biotechs because, we look at fundamentals. So a company with little to no revenue and massive losses is not always going to play out well in our model. So, dive in on these names like Biohaven, Bridge, and Apellis and see if there's anything to do, because it's an interesting chart that's starting to show some signs of cracking. Bullish fund, strong trend as we close above the trend line, but look at the relative strength starting to turn. Still a lot of green here, but I think that if you're in biotechs and you have some good gains, and you can lock in some winners unless you're really deep in the weeds and feel compelled to hold on, because as a group, if I look at XBI, I'm starting to see the personality change. Now, it could just be a quick hit like this, right? Down and out, down and out. We never know. You don't know, so, which is why you manage risk. So let's dive into what's trending now. Friday's movers and shakers. Western Digital had a solid week as a lot of companies were commenting on work from home trends. And obviously, if you're a storage company, you sell into that trend. Carnival Cruise Line, some additional cruises set to resume in November. Also part of reopening trade in and around vaccine and treatment. So Carnival up 6 3/4. Norwegian goes along for the ride as part of that reopening trade as well, up 6.25%. Hewlett Packard earnings obviously might have had an impact also on Western Digital. So Hewlett's earnings come in better than expected. Bullish rating up 6%. And then finally, energy, as we said, had a good day on Friday. So MPC was up 6%. That's Marathon Petroleum. Does have a neutral rating. And, some signs of life potential in the energy space. I'm not ready to get excited about it, but there are some signs of life there. Loser side of the board is interesting because there's not a ton of company-specific news that's driving the trends in any of these stocks. eBay is admittedly one we've liked, and it hasn't worked, down 3.6%. With a bullish rating. TSCO down 2.75%, neutral. Abumed is neutral, down 2.5%. Market Access and Kroger round out the groups. I will note that Kroger was taken out of the IBD 50. For those of you who pay attention to that list, the IBD 50, which reconstitutes every week, Kroger was dropped from that list over the weekend. So let's dive into the charts where I think the biggest development last week was rates. I know a lot of people pay attention to the equity market, the SPY and the Qs going out at all-time highs, right? But those are trends that have been in place, okay? You should not be surprised to see SPY and Q at all-time highs. I've been talking about it for months, that the path of least resistance is up, and we're likely going to see upside and records. We've talked about it, right? The liquidity is driving it. The bigger development in my mind is this backup in rates, and especially the curve steepener, where the bigger backups are at the long end, because the Fed told you there's no growth, but the Fed also told you they're going to let inflation run hot. And for those who have read my market survival guide week in and week out that's published on Tuesdays, highly suggest checking that out. We've been talking about how diversified investors who want to maintain an exposure to fixed income, in particular treasuries, should be shortening duration, coming in on the curve. So for those who have followed that mantra, you didn't get hurt last week on the curve steepeners because you've been shortening your duration. You own the portion of the treasury curve that wasn't as impacted negatively. So take a look at the 10-year here. We've got a topside breakout above the 50-day, pull back to hold it, and then moving higher again, all as the RSI may be shifting into a bullish regime. This is kind of interesting because it hasn't been in a bullish regime in quite some time. It's been neutral at best and bearish. Tried to get going back in June, couldn't. But notice what happened here on the retest, higher low, and potential shift. So it's kind of interesting, obviously still below the 200-day, but there's a lot of room from 72 basis points to 1.07%. Gold, likely just a consolidation within the context of the trend, in my opinion. Hugely overbought on this run. Pull back to consolidate. I think you're looking at 1900, between 1800 and 1900, your big support zone as the RSI holds bullish ranges. All playing out as the dollar is burned at the stake and trending lower. Dollar debasement, a key part of the strategy to get the global economy functioning again. And I would call it fiat debasement, because all central banks are printing to various degrees. That should be a positive for gold, and it should also be a positive for the inflation theme as it bears itself out in commodity strength. Take a look at the CRB commodity index, just a nice steady trend higher above the 200-day moving average as momentum shifts into a bullish regime. The question now is, from a strategic positioning standpoint across asset classes, is are we going to see commodities begin to outperform equities? I don't think we're there yet. Well, it's not that I don't think we're not there yet. It's an inline at best. So, but something to watch. So that'll wrap us for a Monday. Welcome back take us for a test drive. I'll be back with you on tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.